things have felt very abnormal since around mid-March, and it does make business and consumer confidence quite challenging when things don't feel normal. So this is really a first step to getting the property industry back into action and people buying and selling more than they currently have.
And New South Wales, I think the ACT, it's hard to follow the bouncing ball, isn't it? Because every state is different and territory is different.
Yeah, they are different. I mean, Victoria is a state that is taking the longest to make changes. We've seen WA in South Australia, very low levels of infection, so they do seem to be coming out of this quite quickly. But New South Wales, you know, it is our biggest state, and obviously Sydney is such a big auction market, so it will be a little bit of a return to normality.
Interesting, commercial farming continues to accelerate, Nerida.
Yeah, it is interesting on real commercial. We are finding that demand for shopping centres is very, very low. It's really pulled back. People are very nervous about buying shopping centres and retailing. No surprises there. Office similarly has pulled back. So pretty much every commercial property type is seeing very low demand compared to the same time last year. The one exception, though, is commercial farming. So we have seen a significant pickup from last year. Interestingly, it is WA that is leading the trend, a very, very strong pickup in the level of interest in Western Australian commercial farming. Probably driven a lot by changes to drought conditions, particularly on the eastern seaboard. We're also seeing some pretty solid demand from overseas. I think that the weak Australian dollar is really helping. And then I think just more broadly, the way that people are looking at commercial farming, they are looking beyond the commodity cycles and the environment and all those sort of factors that probably in the past led to less stable conditions for that sector.
Nerida, just going off script a little bit, but it's been a huge week for the banking sector. One of the stories of the week has been Embank and them tapping into people's redraw. It's caused a huge blow up, and the reason why I ask you is because there's a direct correlation to the property market.
Yeah, it is bad news. I mean, I think one thing that we don't want happening at the moment are people or businesses in particular making decisions that impact people or surprise people. You know, I think people with Embank, if they had fair warning that this was going to happen, they may have looked at it a little bit differently. But the fact that it was sprung on them was quite shocking. So, you know, people are very stressed at the moment. We can see from consumer data that the level of how much people's confidence has plummeted, and people are worried about their jobs. They're worried, you know, as well as their health. You know, so there's this double whammy that's happening at the moment. So the more that business can give people fair warning and about things like what happened with ME, I think it will be better.
I tell you what, they weren't slow to react, were they? The four banks, they all quickly come out and said, "Well, we won't be doing it. Don't you worry. This won't be happening with us."
Yeah, it is good news. I mean, I suppose this is one thing with this, with what's happening at the moment. The banking system is still very solid. You know, I think a lot of the banks are seeing now is a great time to come out and, I guess, repair their images post the Royal Commission last year. A lot of their images were tarnished at that time. So, you know, they have been responding well. I mean, you've got things like the 6-month mortgage payment freeze, which has been a game changer. I mean, I do think we would be seeing very, very high levels of distressed sales at this time if that wasn't available to people. So they have been good, and, you know, it was surprising with what ME did. But, you know, overall, the banking system has been, or the banks have been very positive in this environment.
Well, amidst the crazy days and the drama of what's been going on the past few months, looking back, I don't think people quite remember how flat the property market was about this time last year. Homes are actually selling quicker now than they were comparably 12 months ago.
Yeah, we've had one of our analysts, Kate Hart, having a close look at days on site on realestate.com.au, and what we've seen very clearly is that homes are selling a lot quicker. You know, we do find that days on site is cyclical. There's a little bit also month to month. We do see some seasonality in there. January properties tend to stay on site longer. They sell quicker over spring, so you know there's this tendency of change over month to month. But what is interesting is that on a lot of measures, things are looking a lot better for property than they were 12 months ago. So days on site are well down. You know, properties are selling very, very quickly. They're not sticking around a long time. we are seeing inquiry levels up 24% from last year. So people are actually searching more. You know, we've seen that for quite some time, but they are now clicking through to inquiry. So it's not all good news. I mean, I suppose the main one being is that we just don't have many properties on the market at the moment. We've seen a real drop-off in the number of people selling. So buyer activity is strong, seller activity not so much. And then the new development sector, we are seeing some quite positive signs from in the house and land sector, but apartments are still seeing relatively low demand. So it's you know, it's still very mixed in terms of the data that we're seeing out there. But you know, certainly far stronger than I expected mid-March, when you know I really thought that things would be far more dire at this stage.
Absolutely, yeah, tiny steps. Some sense of normality today for auctions with a few people there. Nerida, we look forward to talking to you next week.
See you then.